All right, guys. As you guys know, my name is Witchel Joseph. I'm not a financial advisor. Everything that I'm presenting is for educational and entertainment purposes only. So, today we're going to pick up from where we left off last time. We're going to talk about a little bit about candlesticks just to review the last class. But as far as who's in here, let me know. Is there anybody that's completely new in here that doesn't know how to read candlesticks? Does anybody in here do not know how to read candlesticks? That's where I'm gonna start. Anybody? We all up to speed? We all up to speed on the candlesticks? All right, if that's the case, then I might as well.
You want to jump into that DraftKings early, bro? You told me to pop in on you.
Yeah. All right, let's do that. Because I'd rather get it going, and then I'll just circle around, you know. All right, let's do that. So I'm gonna pull up some candlesticks. So on the charts, if you guys know how to read candlesticks, you guys don't know how to read candlesticks, I'm gonna review the basics using the DraftKings, and also go into what I'm gonna teach you guys today. All right, one moment. Give me a second. I'm gonna share my screen. Oh, also before I forget, all these videos are recorded. If you guys are interested in the recordings, I'm gonna drop the link to my coffee for those who are not already, who haven't joined already. All right, drop that.
Yes. That's good.
So copy. So there is the link in the chat, and that is the link to get the recording to the videos. And definitely mute yourself when you come in, please, just to make it courteous to others. All right. So you guys see the chart? You guys see my screen? I'm gonna go to DraftKings.
Yeah.
This is Apple. Go to DraftKings real quick. DKNG. I'm gonna go to the daily. I'm gonna take out some of these things just to make it more simple. Take off. Take this off real quick. All right. So this is DraftKings on the daily. So yeah, this is DraftKings on the daily. So as you can see, DraftKings first dropped into the market and IPO'd on July 25th, 2019. So when I say the word IPO, that means initial public offering. So in order for a company to have stocks and go public, as it's called, they have to raise money and make an initial public offering so that this money could be the value of all their shares of stock. You guys follow me? So they IPO'd back in 2019, and you see that it kind of went parabolic. You know, it had a huge growth, you know, in December, and then it just, and one thing you'll notice is when stocks have healthy growth, it looks like staircases kind of. It's like you go right here, you go to the first stair, then you go right here, then you level off at the second stair, and then you could drop, but just know that like every time you're going up and you're doing that staircase, is very healthy, is very good, and that's what leads to the parabolic growth that DraftKings had You see June 20th, it already reached $40. And it reached its next peak in October of 63.73. And then you see all-time highs on DraftKings was $74 back in March of 2019. Now, remember, let me ask you guys, when you first look at a chart, what is the first thing you're looking for? Anybody? Go ahead.
Trend.
Yep, you're looking for the trend. So can somebody tell me, is DraftKings on an uptrend or downtrend? Good question, right?
I'm trying right now.
It's on the uptrend, right? And now, well, yeah, I wouldn't say uptrend now. Look at like, so it all depends on where you start looking from, right? But if you're looking from the beginning, it's on the uptrend. Why? It never came down to where it came from. Make sense?
Yep.
But if you start from right here in March, you could
It's on a
say it's on
downtrend.
a downtrend because it never came back up to where it was before. You see what I'm saying? So the first thing you want to know, you want to recognize is the trend. You see that it's on an uptrend, but you see that the trend has changed and now it's currently on a downtrend. You guys see that. And how do you know what an uptrend or a downtrend is? Let me show you this real quick. How do you know? Like, this is how you know. All right, you guys see this right here? You guys see my screen still?
Yeah.
All right, so you know you're on an uptrend. Why? Because you're making higher highs and higher lows. You see that? You see how the highs are getting higher and the lows are getting higher? It's an uptrend. But now, when you're making lower highs and lower lows, you're on a downtrend. So back to the chart. Look, lower highs, lower lows. You guys see that? Lower highs, lower lows. That's a simple way to know whether you're on uptrend or downtrend. Then, once you know the trend, you have to look at levels. Levels that the stock that we call support and resistance. Can anybody tell me what is support and resistance?
Support is on the bottom where it probably consolidate.
You can call it the floor.
Say again?
You can call support the floor. It bounces off from the floor. The floor is where it doesn't really go too far lower from. It's acting like as a support, as a floor that the price keeps bouncing off of. Make sense?
Yeah.
And then resistance, you can call the ceiling, which is capping the movement of the stock. You know? So once you find support and resistance, you can find areas and zones where the price is probably going to respect. Because the main thing with stock prices, it's going to follow the path of least resistance. If there's resistance there, it's going to go get away from it. Make sense? So right here, we're gonna so like right here in September, you could say that even right here, if I draw a line, that was a resistance, right? What about this light blue line right here? What can we call this? Or better yet, this darker blue line. Yeah, this darker blue line with support. Because you see it bounce off right here, and it bounced off from that point. And then along the way, it hit different resistance points. But you see it hit this resistance point, and you see it hit this resistance point, and then the ultimate resistance point up here. But now there's a lot of patterns, candlestick patterns you guys need to know and start to realize. So this right here, does anybody know what this pattern is right here? Do you guys see this right here, and this right here? Let me annotate so you guys see. So what do you call this? Can anybody tell me what is this called right here? This pattern right here. What is this called?
Head and shoulders.
Head and shoulders. All right. I want you guys to write that down wherever you're at. Like start looking at head and shoulders, and different candlestick patterns. Head and shoulders is a very big one. Now, does anybody know what does the head and shoulders mean or does or tendencies? Anybody? What kind of pattern? What kind of pattern is the head and shoulders pattern? In case you don't know, the head and shoulders pattern is typically a reversal pattern. Did you guys hear me?
Yep.
This is a reversal pattern because understand this, right? So the price was right here, right? It made a high. It got rejected, right? Then it came down. It made a higher high. So right here, it's on uptrend. Oh, I'll make this line a little straighter. Hold on. So right here, it's on an uptrend. See that? It's on an uptrend. Because why is it on an uptrend up until this point? Why is it on an uptrend up until that point? Anybody tell me?
Is it because it hit the support?
Yeah, but how do you know whether something's on an uptrend or downtrend? What is that? What does the structure have to do?
Higher highs and higher lows.
Yep, higher highs and higher lows. Look, here's a high. That high is higher than that high. That high is higher than that high. Here's a low. This low is higher than this low, which is higher than this low, which is higher. You get the point. But look what happens at this point. It comes down. It makes a lower low. And then it has the audacity to make a lower high. You see what I'm saying? Any questions?
Yeah.
So the fact that it tried to make a higher high and failed, and instead is making lower lows, that's how you know this is reversing. This is reversing. Now it is going down to the downtrend. Now, the question is, how far down could this go? The main way to realize is how to track the price movement. This is called price action. When the price moves different ways, is to keep track of the other lows, every low and every high. So for example, like this one right here. Did that work? That's the low, right? And then I can make another one right here. Do you guys see how I'm marking up the lows? So now you gotta look at, so whenever you have a head and shoulders, you know it's a head, the shoulders on the both sides, the head's in the middle, but the line underneath both shoulders, this line, this light blue line right here, that's called the neckline. You guys follow me? That's the neckline. So here's what I want you guys to understand, right? When you look at these candles, let me erase all this, right? When you look at these candles, start looking at these candles as people and not just candles. You guys follow me? Start looking at these candles as people. Why? Because whenever you're looking at these candlesticks, you want to ask yourself, who is suffering the most? Who's suffering the most? So for example, right here, these people, at this point, they've seen the prices going higher, getting higher, making higher highs, right? So imagine the person that got in right here. Are they suffering? Like, let me move the chart. Let me move the chart a little bit just so you guys understand what time frame I'm on. But let me move this a little bit just so I can make my point. So can somebody ask me a question? If you got in right here, are you suffering right now at this point? Anybody? If you got in right there, would you be suffering?
Yeah, because the price dropped.
Yeah, the price dropped on you. You thought the price was gonna keep going, but guess what? The price dropped down on you. So now you gotta understand what the price does. You see the price, it goes away. The price is gonna come back there because what happens is that there's some people that hold that hold their trades, right? They hold their orders, and the market comes back for those orders. So even right here, there's some people that have orders that wanted to sell, but the orders didn't get filled. And then there's some people that have buy orders that, clearly either they didn't get filled or they got filled, and then they're suffering. So the main thing is this, right? The way that price moves, it does, I don't know why it moves like this, but it moves like this, right? So you see, so now you got to understand, because, for example, all right, I'll leave it right here, right? I'll leave it right here. So these people right here, what about these people right here? They're suffering too. Because, hold on, keep going. Yeah, these people right here, the people that, not the green candle guy, the red candle guy. So the people that thought the market was gonna go down, they're suffering right here. But guess what? The market is gonna come back for those people, but they need to suffer longer first before it comes back to that level. So one thing you're gonna realize is that price likes to fill gaps. This is what I mean by gaps. So if I move this over right here, and let's say I start drawing, I'll make this a different color. I'll draw orange, I guess. All right. So understand the price was here. It came back down. You see how it came back to the level where it rose from? So the people that were suffering here, it came back to them. It filled the gap. People right here, people that were trying to go short, they wanted the market to go down. They got trapped right here. Guess what? Price did this. It came back for them and filled the gap. Do you guys see that? Now, understand this too. Not to confuse you guys. Support and resistance is horizontal, but it can also be diagonal. What do I mean by that? This is what I mean by that. If I go from here to here, that's a support. Do you guys see why that's a support? And if I go from here to here, that's a resistance. Any questions? Anybody have questions? No questions? All right. So, like I said, support and resistance doesn't have to be vertical only. It's also up and down. So basically, as the price is moving, there's resistance all around. There's resistance here, there's some resistance here, there's some resistance here. It's all about finding out where are these resistance levels and which is the path of least resistance. Make sense? Definitely mute yourself for coming in.
No, this is some trading class that somebody just sent me.
You mind muting your screen? I'm not sure who it is. All right.
Looks like Darren.
Darren. Oh, Darren. All right, yeah, Darren. So so what I was saying was these are the resistance levels that are vertical, that are diagonal as well as vertical. So now the point that I'm making is that price fills the gaps. Look at this.
What?
Here is support right here. Fill the gap back to support. Let me just pick a different color.
You're the one that left.
Different color.
I'm not even
I'm
watching.
using green, guys.
Oh shit, he's still on and I shut it off. It says the cat.
All right, so look. So I'm gonna do a different color. I'll use purple. All right, so look. The price comes here, it fills the gap. I'll use a different color. Hold on. Use white. All right, so the price comes here, it fills the gap back to the support. See, every time it comes back up, it's trying to fill the gap. You see that? So you see now right here, the price is right here, comes up, fills the gap, comes back. But now understand that now the support and resistance. So once you start trending, the support usually goes in that direction. Make sense? So now you look at right here, you see that this is support. You see that? So if I just look up the support, you can see that, look, goes off support, fills the gap, off support, fills the gap, breaks the gap. This is when it does this, it's called a break in structure. It broke the structure that I was previously on. And now guess what? Right here, it comes back up and fills the gap up here. Do you guys see this? Do you guys see what I'm showing you right now? So understand how price moves. It fills gaps. So now if we're going to, present day and what's going on, let me erase all this. So now present day, what gaps are left to be filled? This blue line right here is a gap that's left to be filled. Not only is it a key support area, but it's also an important area. Why? Because there's consolidation. So let me highlight this area for you guys and break down consolidation. So make a little square right here. Paste it right here. Slide this over. So make this a little smaller. So check this out, right? Right here, I could even say, and I'll bring this out. This area right here. You guys see that? So the beginning of this box area is consolidation. Can somebody tell me what is consolidation?
When the buyers and sellers are about even and it's trying to figure out if it's gonna go up or down, basically.
Yeah. So whenever the price is trading in a range, like right here is a range. You see the price is like between here and the blue line. You guys see that? That I could probably, I can make this a little bit bigger and say it like right here. So literally right here is consolidation. You guys see that? Make it a little bigger. This is consolidation. Because right here, you see it's going up, then it's going down, and it's going up, and it's going down. It's not going steady in one direction. This is steady in one direction, like steady in one direction. So down here, going from like here to here, you wouldn't really call that consolidation so much. Maybe right here a little bit, but it's when the prices are inside of a range. So understand, when price is inside of a range, it tends to break out. When it breaks out, that's usually a symbol to get ready to hop in that direction. But understand this, the way that price moves, when it breaks out, it likes to break out and retest. What do I mean by that? This is what I mean by that. Like right here is a perfect example. So the price was inside of this range. You see, it wasn't going no higher than the top of this purple line if I just make it a little bit higher, you know what I mean? So this was the resistance level, right? So when price broke up, it broke out, right? It broke out of that area. Then what did it do? It came back down. You see that? That's called a retest. It breaks out of the resistance. It goes back down to retest that resistance, because you got to understand, up until this point, this was the ceiling. Once it broke out, it came back to the ceiling to test it to see, are you still the ceiling or could you be the new floor? And so what you will see is that resistance often becomes support and support often becomes resistance. You guys catch that?
Yes, I just have a quick question. How long is that time frame of consolidation? I don't know, like how long, this
It
is
could
a
be-
1 day chart?
Oh, yeah, this
It
is
shows about a
daily. This
month.
is daily. This is daily chart. So you can see there's like 1, 2, 3, 4, 5, 6.
Oh, those are
7, 8,
days.
9.
Okay.
Yeah, like 13
Okay,
days.
thank you.
Yeah, 13 days in that consolidation area, you could say, right? So, but here's the main thing, is the way that price moves. It breaks out, it retests, and then it shoots in the original direction that it broke out from. So when price breaks out from a level, you don't want to just go in right away. That's what most people do. And this is why most people get hurt, because they like to play out immediately on the breakout. Now, you can do that, but you got to know that the retest is coming. You understand what I'm saying? You guys understand what I'm saying?
Yep.
Yes.
So when it breaks out, you want to wait for it to come back and touch it, because what could happen is that it could come down here. It could even come down here and consolidate and then go up. You see what I'm saying? So all this time you're in this trade, it hasn't broke out and retested in your direction yet. You know what I mean? So this is a very basic strategy, but very effective. Is you want to wait for the price to break out from a level, come back to the level, retest that level. Then once it starts showing green and shooting up, that's when you want to get in. You guys understand? So once the green came and broke like this level, that's when I would have hopped into the trade. That's the safer entry. Does this make sense to you guys?
Yes, sir.
All right, so like I was saying, so that's just the behavior. And what I want you guys to start looking at these charts and seeing this, because what you're gonna realize is these are everywhere. They're literally everywhere. Right here, broke out, retest, continuation. Let me just keep going, see how many I can find. Move this over.
You said wait until it retraces to find an
Yeah.
entry.
Yeah, wait for the retest and hop in on the continuation. Hop in when it let me erase this again. So like for example, this example, right? Or all drawings. So this example right here, it broke out from this level, right? And then it came back and retested this level. You see how it broke out from the blue line, it came back and retested the blue line? So now you want to wait for a signal to tell you that it's going to continue into the original direction, because when it breaks out and retests it, it continues in the original direction. Does that make sense?
Mhm.
And you're gonna
So
see,
I'm just curious, what would you, I guess, identify as something to jump in here?
so I mean, so this is just like, this is like, let's say this didn't happen yet. Like let's say this was the present moment. If it was like right here or something. Let's say the price is like right here. You see how it just broke out? Like, cause while this chart is actually moving, you're not gonna actually be able to know what's gonna happen. But what you can notice early on is in this purple area, it's consolidating and staying within the range. And after consolidation, the banks get ready for the big move. Because understand, right, in that purple zone where it's consolidating, that's the banks taking little by little, putting in their position. Because at the end of the day, it's the big money that moves the market. All we do, we try to go along for the ride, So these big banks, these big institutions, they have a problem that we don't have. They have too much money. So when you have too much money, you can't just buy as many stocks as you want, because what will happen is while you're buying it, the price is getting higher on you who's trying to buy it. You understand what I'm saying? Does that make sense to you guys?
Yep.
So because
Mhm.
they can't do it that way, what they do is little by little. Like for example, let's say they want this to go up. So every time it goes down right here, oh, let me buy some on this day. Oh, it's up right, let me buy some on this day. Let me buy some. Every time it's a red day, I'm gonna put in buy orders. And when I'm ready, I'm gonna make this thing shoot up. You understand? So that's basically what they do. Because if they had bought all their shares at once, it would have been very hot. We would have known immediately to like just hop on. But when they do it like this, it's more on the low, it's more discreet. They're able to unload their position. And then when they're ready, like down here, or even down here, they say, all right, let's buy up the market now. We got enough positions, let it rip. So now, once it breaks this level, because it breaks the consolidation, that's when it breaks out. You see the red candle, that means it came back down and retouched the level that it broke out from. Now, after that point, that's when you're waiting and you're looking to see, you know what you're looking for? You're looking for buying pressure. Because right here, we don't know there's gonna be a green candle yet. We just know that it broke out and retested. So now what we're doing, we're looking for like, because you know, while this candle is forming, it wouldn't be like this yet. Like if I go to a small time frame, you can probably see it. Let me do that. So let's say I go to the 4 hour, right? Where's the purple? There it is. So back to the purple box. Look at it on the 4 hour. You see on the 4 hour, you see a little bit more detail. You see that little green candle right there? So it came back, and then this green candle could have been an indication, okay, there's some buying pressure. But I would have waited until it looks like it's about to clear the top of this candle. You know, I would wait for adequate buying pressure to break this level. So I would probably hop in right here just to be safe, because what could happen is that it could be a fake out and then it's going to retest again, you know? Does that make sense?
Yep.
So we wait
Yeah, that makes
confirmation.
sense.
So literally at this line right here, that would be the safest entry. If I want to be more risky, I could enter a little bit early after this candle. Let's say I see this candle enters green, I might enter like somewhere right there, just because I seen that the next candle is green, and I see that it at least hit a level of previous, you know. But to be safe, I would just at least the body or the wick. That's the safest entry, because at that point the price has proven itself. So the thing about stocks, you want them to prove themselves. Nothing really matters until it proves itself. So you just gotta wait until it proves itself. So at this point, it would have already proven itself. It would have been a good entry, and I could have wrote it up, you know, and take profit at any point, you know. So that's how you play these. So now, let's.
Thank you.
All right, you're welcome. You're welcome. So now, let's go to the recent and talk about the future of DraftKings. So DraftKings, as you guys know, this is a sports betting stock, and sports betting has become legal in more and more states. So as it becomes more and more legal, this stock definitely will continue rising as it's been, because it only came out 2 years ago, and then you see how crazy it's been. So, so most likely this is gonna come down to at least this blue line right here. Why? Because it would fill this gap right here. It has to come back for these people. So because what happens is when it comes back there, so like you see like this purple zone that I made, I can stretch it out, right? And I can say that, yeah, the banks have orders that they filled and made the price go up from, but there might be some orders left over that if it comes down in the zone, it might buy back up. You understand what I'm saying? Does that make sense to you guys?
Yeah, I'm gonna be watching it when it break 35.
Yeah, but here's the thing: if it breaks this line right here, you see that the next liquidity is at the yellow levels, this one right here and this one right here. Why? Because the price always fills the gaps. No, so you see, it fills the gap. Like I was running earlier, it fills the gap on the downside, but realize it also fills it on the upside too. You know, like this came down. You know, like it might not fill it 100%, but it chooses to fill certain gaps, and then also it might not fill the gap right away. It might come back way later to fill that gap. But know that it does try to fill gaps at all times. So for example, right here, this yellow line, like it dropped from here and eventually came back up to that yellow line to close that gap to get the people that were up here, you know? And then Now, like I said, the blue line is the next gap, the yellow line is the next gap. But think about this. Let's say it hits the blue line. Now, where is it gonna go next? That's what you should be thinking about. Like, let's say, the price actually comes down to the blue line. Now, what's the next liquidity level? The next liquidity level is up here at the blue line. That's the next gap. And then next gap after that is the yellow line. You know what I mean? So that's how you got to start thinking about the stocks and start looking at their movement. And then only from doing this and spending time will you be able to make some accurate predictions. All right.
Quick
You guys-
question.
Go ahead.
Oh, sorry.
Go ahead.
So with that blue line at where he was saying like 30, I think it's like 34.99. I can't see it that well,
Yeah.
but or
Yeah,
like
that's
close
it.
to 35.
That's it.
Is that considered the support right now? Or
Yeah, it is because look,
okay,
right here is support, right here is support. You know what I mean?
okay.
So that's the support.
Thanks.
But so
It broke
that's
the previous.
because
It
look
broke
at
the
this.
previous today.
Before this was the low, right? Maybe this could have been support on some level, right? This could have been on support before this happened, but it broke this level, it broke this low. So now you're looking at the next low, which is down here. You know what I mean? So you're basically following the path with the structure. Does that make sense?
Yeah.
Yeah. So now the question is, if it breaks this low, the next level will be right here. You know? And if it was crazy enough to break that low, the next level will be right here. Why? Because then it will close the gap. That's that from ever since July, it will close that gap. And we already know. So whenever you trade, you got to put a couple signs. You got to put a couple of confirmations together. You got to put 2 and 2 together. So it's on a downtrend. It's making lower lows, right? It's also a head and shoulders, which is reversal, and reversing. It was on an uptrend, so it's reversing to the downside. It broke the low. There's a next level of resistance right there. So those are all signs this is going down. Is that clear enough? Any questions? I got a minute left. Any questions before I leave? If you guys have any questions, my coffee link is in the chat where I post the recordings of class. Thank you guys for coming. Hope you guys learned a thing or two.
Thank you, man.
Appreciate you, bro.